Yo, what's up, everybody? It is Thursday, February 9th. What's going on? First of all, hey, who you got in the Super Bowl? I'm just curious. Like, I have to tell you, maybe I did say this. I don't know if I said this in the beginning, or not the beginning, but a while ago. I actually said this at the beginning of the season that I thought Philadelphia and the Chiefs would be in the Super Bowl, and that's exactly who's going to be in the Super Bowl. And I got the Chiefs to win. My guy, Patrick Mahomes. So just write in the comments here who you think is going to win. All right, let's talk, folks. I'll be honest with you, as I always am, because I really try to be honest, and I really try to be heartfelt, and I really try to be like, you know, just very open about everything I talk about here, and try to educate you. Like, I'm a little bit surprised that the last 2 days of market weakness, because like yesterday was a really positive fiscal flow. I mean, we had a 46 billion leading flow. We had something like a 34 billion net flow. I mean, that's strong, man. That's strong. And today, I don't know what, maybe we had a little bit of a drain, but like we were down yesterday, we were down today, and I don't know if that was just like some kind of, you know, somebody said something, or another one of these freaking interest rate jitters or something like that. But I would discount it, and I would think that we're going to bounce back. But remember, I've been telling you guys now for a couple of months that February 15th is going to be the peak in fiscal flows, but it's going to be big. I mean, right now, we're averaging like over 30 billion. The 10-day average on leading flows is over 30 billion. That's a 600 billion month. And by the time this month is over, I mean, it could be possibly 700 billion we're going to get like a 45, 46 billion quarterly interest payment on February 15th. But then again, we come into this period of March, April tax drain. Here's another thing that's very, very interesting. For the first time in 65 weeks, folks, 65 weeks, we saw in the weekly AAII sentiment survey, that's the American Association of Individual Investors, we had a bullish reading. The bullish reading was 37.5%. That's equal to the historical average, but that's the first time we hit the historical average in like 65 weeks. Like, you know, like on the one hand, I'm thinking that's cool, because, you know, when sentiment is, as you know, and I've spoken about it in the past, is a big part of short-term market fluctuations or market movement. But on the other hand, you know, it could also be a little bit contrarian. Like everybody's turning, not everybody, but like the number turned bullish right now at a kind of a precarious moment, right? Because we're coming up to that February 15th date that I told you about, which is the peak of the fiscal flows, and then we got the tax drains in March, we got the tax drain in April. So like, I don't know, but I'm gonna err on the side of bullishness. I like the fact that sentiment is starting to swing positive, because like after 50, 60, 65 weeks of negativity, and I've been saying this, like when you unwind this negativity, when it ends up being unwound, and remember, a lot of it is based on a completely false, erroneous understanding of what's going on in terms of like monetary policy and stuff like that. So like, I like the setup. All right. I mean, a lot of people could get really, really burned here, and they should be, frankly. I mean, if you are dogmatic, if you are an ideologue, if you don't change your view because it's just like a mythology that you believe in, and you don't care to investigate or go back to the drawing board or look at the empirical evidence, that my feeling personally is you should get freaking destroyed. And I should have your money. So that's the way I'm betting right now. That's the way I'm betting right now. And we'll see what happens. We'll see what happens. So far, I don't think I've led you guys astray. I don't think anyone would say that. I think I've laid it out for you almost exactly as it has played out. And, so we'll see what happens. And I've said, like, the real thing for me, if you want to talk about what is the potential danger, what is the potential landmine, what is the potential, bomb that could go off, that continues to be the debt ceiling. But that's not until June. I mean, Treasury right now is situated with enough to make normal payments. We're not going to go into any kind of default. We're not going to go into any kind of spending cuts right now. So, I mean, I don't see a problem with that. So yesterday, I was talking about maybe I don't know, like a lot of you guys were enthused about this. Like maybe we do some kind of an MMT, like super, physical mental challenge. I don't know. I got to think about this. Like maybe I could set up some event where we could go, all of us or those of you who want to do this, and like just test ourselves and do something really, really hard. I told you that next weekend I'm going to be going on this wilderness survival skills training course. I'm really looking forward to that in Granite Falls, Washington. Temperatures high in the day is like 45. It's like 34 at night. It's going to be rainy. No tent. It's just going to be a tarp, man. I ordered some shit on Amazon. I got my little tin cup over here. See? The guy said, the instructor said, bring a lot of caffeine. I know you. Maybe some of you people don't know that now I'm into coffee roasting. I'm gonna set that up, by the way, as a little side business. If you guys like coffee, like I'm really into coffee roasting. I bought a machine. I roast coffee. Today I had some really, really good Guatemalan coffee that I roasted a couple of days ago. So anyway, yeah, I mean, it's like accumulate, man. Accumulate good assets. I don't, again, I mean, the whole thing to me is, when the market pulls back and when we have a positive environment, and that really boils down to the fiscal flows, like you want to accumulate assets and you just want to be patient. And I said in a prior video, I said that's what's going to take care of you for the rest of your life. And again, I go back to that interview that what's his name, Warren Buffett's partner, Charlie Munger. Like he was asked a question like, when do you sell your stocks? And he's like, what? I don't sell my stocks. As a matter of fact, I just saw it today on some internet post that Warren Buffett again was saying like Coca-Cola is the greatest. He's not looking for the next Amazon or the next Apple. And you might say, well, that's dumb, right? But how is the guy dumb? He's like the 5th richest guy in the world. He invests in Coca-Cola. I mean, it's about money, it's about profits, and it's about compounding of interest, compounding of profits. That's what makes you rich over time. You don't have to be a genius. It's good to be a genius, but you don't have to be a genius. That's the beauty of the system, is that it's mathematics. It's the growth function. That's what makes you rich, man. That's what makes you rich. So anyway, yeah, let's get back to today. Like I was, be honest, I was surprised at the down move today. Like I don't know today's numbers. I'll see them tomorrow. But Yesterday, a 46 billion leading flow. That was a good day. And a 34 billion net flow, that was, that's a really good day, man. So I said February, we're going to peak out on February 15th. I mean, it could be a couple of days early. I've seen that in the past. That has happened in the past. But I'm really curious now. I'll be honest with you. I'm really, really curious now as we get into the anticipated negative period, which is March and April. I'm very, very curious now for two reasons. Number one, we don't have, the Fed is tapering off on its rate hike, so that's not like the initial, boom, negative impact, freak out, monetarist reaction that we had last year when they first started doing it, and there was, many rate hikes to come, so we don't have that. All right? But also because it looks like sentiment is starting to shift. And while I'm not, I use sentiment as a contrarian indicator. When it first goes from like 65 weeks negative to 1 week positive, it's not like, oh my God, I gotta sell. No, it's gonna go 65 weeks negative to 65 weeks positive, or maybe 40 or 50 or something like that. It's going to be an extended period. So I want to see how that plays out. I'm very curious. And if you're wondering, I'm going to be putting my money to work. I'm going to be putting my money to work. And again, the only thing I'm going to be warning about and continuing to warn about is the debt ceiling, and we don't want to go into an austerity situation. But I think I said yesterday in my video that if you're going to put a gun to my head and say, well, what do you think is going to happen? I think they're going to come up with some kind of reasonable agreement where it is kind of like, fake cuts, nothing substantial, and everything's going to be okay. I just don't see them going hard line default. As much as they're saying that now, yeah, I understand that. That's a negotiating stance. Like if you're into negotiation, I'll just give you some little personal, thing about me. Like, maybe I said this in the past, I don't know. But people hate the process of buying cars, like going into a dealership and haggling and buying cars. I love that. And I always win. You want to know why? Because I'm willing to walk away from the deal. I know the value. I research the value of the car I want. I lowball. The dealer's always going to say, no, that's impossible. And I tell him, like, you're not going to sell it for that price. All right, I know what the value is, and I always win. And not only do I win, I end up getting the price basically wholesale, like dealer cost. I love it. Most people hate it. That's why we've had like companies like Carvana exist, because people don't like to do it so much that they want to go to a fucking vending machine and just pay the maximum, man. And like the vending machine spits out the car. I don't know. Like, I love it. I love negotiation. So I think that's what's going on right here. Anyway, that's it for today, folks. Let's think about this, physical, mental, stress kind of event that we can maybe come up with. I think that would be really cool. We all get together, kumbaya, around the campfire. No tents, a tarp only. After I get back from this next week, I'll tell everybody and I'll explain how we got to do it. I think that'd be really cool. What do you think? All right, that's it for today. See you tomorrow. Bye.